Today, a bipartisan group of senators reintroduce a comprehensive crypto regulation bill. The DOJ arrests a security engineer in what the agency calls the first criminal case involving smart contracts. And the head of cyber threat intelligence at Chainalysis breaks down the data from the platform's mid-year crime report. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices are mixed this morning, with Bitcoin hovering at around $30,500, Ether trading at around $1,880, and Solana trading at more than $22. Today's price moves come after the release of the June CPI report, which showed inflation rose less than expected, with consumers getting a break from price hikes. And over on Wall Street, Coinbase shares reversing course from those huge gains made yesterday. That stock fell about 4.5% by noon Eastern. Cathie Wood's ARK Invest sold off $12 million in Coinbase shares, just as analysts at Oppenheimer, Piper Sandler, and Atlantic Equities all downgraded the stock. Okay, let's get to the top stories. A bipartisan crypto regulation bill is being revived in the Senate. Democratic Senator Kirsten Gillibrand and Republican Senator Cynthia Lummis are reintroducing the crypto bill they first proposed last year, with some updates. Under the proposed rules, all crypto assets would register with the CFTC, and all stablecoins would be issued by a bank or credit union. At the same time, a new regulatory body would be created to oversee consumer protection and market stability, and that new regulator would be jointly led by the CFTC and SEC. DeFi is also getting new rules in the 2023 version of the bill, including risk management for centralized exchanges that work with DeFi protocols. After announcing the new bill, Senator Lummis took to CNBC's Squawk Box to discuss how it could prevent another meltdown like we saw in 2022.
When we have companies that are incorporated offshore, not having adequate consumer protections and being able to function, as Gary Gensler likes to call it, in the Wild West, we're making sure that consumers can get burned, and our bill would prevent customers from getting burned in the way they can be burned now. So I'm hopeful that people will finally recognize that this legislation is not only needed to protect consumers, but so there are rules of the road for these companies.
Next, moving overseas, the EU's financial markets regulator revealed the first batch of detailed proposals for crypto rules under the Markets in Crypto Assets, or MiCA law. The proposals in this 158-page paper specifically explain how crypto companies within the European Union should be authorized and include how those firms should handle user complaints. The European Securities and Markets Authority said another set of proposals will follow in October, and those will focus on sustainability and record keeping. The final set should be expected early next year and will consider when crypto should be considered a security and how foreign companies will be able to serve EU clients. Stakeholders have until September 20th to comment on these proposals, and MiCA takes effect in 2024. Last, the Department of Justice has arrested a security engineer in what the agency claims is the first criminal case involving an attack on a DeFi smart contract. The U.S. Attorney for the Southern District of New York announced the indictment against Shakib Ahmed, accusing him of wire fraud and money laundering as part of an attack on an unnamed DeFi crypto platform. The DOJ claims Ahmed used his expertise as a senior security engineer to steal around $9 million in crypto in July of 2022, using an exploit of the exchange's smart contracts to add fake pricing data. The agency also claims Ahmed laundered the money through several transfers. This is the second indictment of a crypto fraud case from the Southern District this week. On Monday, federal prosecutors indicted a Moroccan national on fraud charges over a fake OpenSea website. All right, on to our main story. A new report out today reveals crypto-based crime is down significantly so far this year, but there is one form of crime that is gaining traction. Crypto World's Talia Kaplan reviewed the research put together by Chainalysis and spoke to the platform's head of cyber threat intelligence to explain the findings.
Chainalysis just released its crypto crime mid-year update, which sheds some positive light on this space. The study reveals that through the end of June, crime was down 65% compared to the same time last year. Can you break down the data for us, starting off by explaining the forms of crypto-based crimes that are declining the most? I see scams top the list, followed by hacks. And it's interesting to note that scams are decreasing this year, even as crypto prices have been increasing. You would think that positive price movement would translate to higher scam revenue as more people show interest in the space and therefore could be exposed to different scams. So how do you explain what's going on there? Why do you think overall crypto scam revenue significantly dropped so far this year?
Yes, we are very encouraged by the findings of the crypto crime report this year in terms of having that decline in overall illicit revenue across nearly across the board for our illicit categories, including scams and darknet markets. That is a great point on scams, and we are watching for the potential for them to rebound as investment scams might become more attractive. We do highlight in the report that impersonation scams have taken less of a hit, and we believe that scams have taken to impersonating authority figures and influencers in a way that can further coerce victims into sending payments. One thing we do want to point out is that romance scams is also something we will continue to watch and monitor for. Romance scams are agnostic to price fluctuations in cryptocurrency, and on a per victim basis are receiving more total scam payments than other types of scams.
Is there any one particular reason as to why scams significantly dropped so far this year?
So we note in the report that the disappearance of two of the most prolific scams of last year has really impacted scam volumes this year. While we're encouraged by that disappearance, which could be due to law enforcement activity and pressure, this is a fragile trend, and we are on the lookout for what the next big scam might be so that we can highlight it to investigators from private and public sector and try to prevent their customers from sending funds to these scams.
As I was reviewing the research, I saw that while overall crime in the digital asset space is down dramatically so far this year, one form of crypto-based crime, ransomware, is on the rise. Your blog post out today notes that ransomware attackers are on pace for their second biggest year ever, having extorted more than $449 million through June. Why do you think ransomware attacks are accelerating right now, especially compared to other types of crimes?
Yes, this is the important outlier of our overall decline in illicit proceeds. Ransomware definitely stands apart, and it's really rebounded from its decline last year. We reported last year ransomware declined by 40%. And so these ransomware findings did surprise us. And we do believe that this is due in part because of the Ukraine-Russia conflict. We've seen operators who are primarily based in Russia have settled, relocated, been able to redirect their efforts towards ransomware from potential military activity last year.
Can you provide an example of a ransomware attack uncovered while Chainalysis was putting together research for this report? I know you just touched on one, but do you have any others?
Yeah, so I believe also the increase that we're seeing is due to the rise of big game hunting. And so Clop ransomware, for example, is on a tear right now, racking up hundreds of victims through the exploit of a single 0 day. And those demands are easily in the 8 figures. And we see in our report that actually there's a longer tail in terms of average ransom payments being paid out in 2023 as opposed to years prior.
So the research points out that if the current pace continues, ransomware attackers are expected to take more than $898 million from victims this year, only trailing 2021's figure. What do you think can be done to prevent this from happening? What is the solution there?
Yeah, that's a great question. We attributed the decline last year to a confluence of factors, some of those being law enforcement action and sanctions designations that prevented certain incident response firms from paying or being willing to pay certain strains. Also, insurance policies that had hardened and encouraged those that they covered under their policies to enact more stringent security policies, backups, trainings, endpoint detection, sorts of protocols that would enable them, if they were impacted by ransomware, would negate potentially the need for them to have to pay. There's also the availability of decryptors. So we've seen private sector companies as well as law enforcement come out with decryptors that they'd been able to supply to victims so that they wouldn't need to actually pay the ransom to get their data back. So there are other efforts that the private sector and public sector together can do to help stave off this rash of ransomware attacks that we're seeing with just increased devastation.
What is your outlook for crypto crime for the rest of the year based on the findings in your research out today? Do you think it will continue on this overall downward trend and that ransomware will continue to rise?
Certainly. So threat actors adapt. We've seen ransomware actors adapt to harden defenses of victims. We've seen them ratchet up the pressure in their extortion techniques, shortening the timelines to negotiate, leveraging more sophisticated techniques. Scammers, too, they'll adapt. With the rising prices of cryptocurrency, I'm sure that we'll see new lures to attract different types of victims from across the ecosystem. So we're going to stay vigilant on this.
You can check out the full interview on crypto crime trends over at cnbc.com/cryptoworld. That's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.